Hi, welcome back to CapexForexTrading.com. In this video, we're going to focus on the Relative Strength Index, which is usually referred to as the RSI. Now, the purpose of the RSI is to indicate if a trend is either overbought or oversold. So it's a great indicator to use to get into new trends, but it's also a great tool to use to take profits out of a trend that's weakening that you're currently in. Now, the way in which this indicator works is that it will compare gains and losses in price that you see in your charts here, and then plot them in a line format that's in this indicator window here. And the way in which we know if a trend is either overbought or oversold is by referencing the scale that you see here on the right hand side. So we start from 0 here and go up to 100. But another two important levels that you're going to notice are the level 30 and the level 70. The reason why they're there is because if the RSI line goes above the 70 level, we take that as an indication that a trend is overbought. And if the line goes below the 30 level, we take that as an indication that the downtrend is oversold. Now, the default setting for RSI is 14, like you can see here. And when you're trading high time frames, such as the 4-hour time frame or the daily time frame, that setting is relevant to that time frame. If you're using lower time frames, such as the 1-hour time frame, M30 or M15 or further down, then you're going to need to adjust that setting accordingly. So, as we mentioned earlier, the levels 70 and the levels 30 are really important to us because they provide us with an indication that a trend is either overbought or oversold. However, don't make the mistake of placing a sell every time the RSI line reaches 70, and don't make the mistake of placing a buy every time the RSI line reaches 30. The reason why is because the RSI indicator has to be used in conjunction with other strategy. It is not a strategy on its own. And sometimes you may need to use it with other indicators as well. And I will show you exactly what I mean. So what we've got here is, if I just get my cursor, we've got the RSI line reaching the 70 point. At exactly the same time, you can see that the price is still rising in the chart. So if I move that across, the point at which prices start to fall is the point at which the RSI line crosses back under the 70 line. So if you are going to use RSI in this way, you need to wait for the RSI line to cross back down under the 70 line. And the same works in the other direction. So if I just find, here we go. If I get my cursor again, you can see that the RSI line has reached the 30 level and prices still keep falling. As soon as the RSI line crosses back over the 30 line, you can see that prices start rising. And if I get my cursor and you follow that, the price chart, you can see the prices keep rising, rising and rising. The other way in which we use the RSI indicator is by looking for divergence. And in simple terms, that is simply when prices and the indicator are trading into different directions. So I'll demonstrate that with this example here. So what we've got here are two highs, and I'm going to connect them up with this line here. So we've got high number 1 and we've got high number 2. And you can see that high number 2 is above high number 1, so prices are still going upwards. Okay, we don't know what's happening at this stage yet past this point. All we know is that prices are going upwards. At exactly the same time, we can connect highs in the RSI indicator. So we've got high number 1 and high number 2. However, you can see that here, high number 2 is lower than high number 1. So by joining them up, we can visually see that the prices are going upwards, but the indicator is going downwards. So despite the fact that prices are going upwards, the RSI indicator is telling us that the uptrend is weakening. So we place a sell, whatever our strategy is, at some point here, and you can see that prices simply fell, and this is where you can generate quite a lot of profit. The last way in which we can use the RSI indicator is by focusing on the 50% level. So I'm just going to draw a horizontal line here and just make sure that this is set dead on 50% and double click so we don't move. I'm going to get my cursor, and the reason, just so you can reference the actual prices at the same time that I'm focusing on the 50% line. So in general terms, what we've got here is the RSI line crossing the 50% level. And as I move my mouse on the or across the RSI line, you can see that the prices are showing us an uptrend. So we are above the 50% line and prices are still moving upwards. Now at this point, we're now crossed back down under the 50% line and we have a downtrend in prices. So that is realistically as hard as that kind of strategy or a way of working gets. But what you are going to do is need to use another indicator such as the momentum indicator or a whole other momentum strategy to trade this appropriately. The purpose of showing you that example is just to show you how the RSI indicator can be used in the 3 ways that we just discussed in this video. So that concludes this lesson. If you do have any questions or comments, do let us know. So please follow us on our channel or follow us on Facebook, Twitter, LinkedIn or Google+, and we shall see you for the next lesson.